event, crucial basically today, event of the week. We're trying to provide you a live commentary in order to go through together the data to see how the market reacted, how could they react, um, and what the sentiment is telling us from a fundamental perspective and technical perspective as well. So as I keep saying, this is your session. Feel free to ask anything you want. This is your session. So today we have plenty of time where we are well ahead of the data. If I'm not mistaken, we have nearly 30 minutes ahead of the US inflation data. So that will give us a time not to go through the charts before the actual inflation comes out. As you already know, double risk event today, right? Inflation in 30 minutes from now, and the well anticipated Fed meeting, Fed monetary policy, along with the rate decision, even though it's widely known that they will not proceed, will not take any actions today. But important today is the inflation, and important is to see the tone of Mr. Powell, the Chairman Powell, the new economic projections that the policymakers will release, okay, and what that will mean for the rest of the year and how will affect, of course, the markets, okay? So, no action is expected today from the Fed in regards to the rate decision, but all the attention, all the eyes are on the inflation um, and Mr. Powell. Okay, as you know already, we have received a round of data. Okay, that indicated and shaped a bit, postpone a bit the rate cuts. But the last 2 weeks, maybe more, we are seeing some kind of an encouraging signal, some kind of a of indications that inflation might slowly uh, uh, slow down further close to the target. Obviously, I have plenty of time until that happens, but definitely the new round of inflation data today in 30 minutes could definitely shape the outlook just few hours before the Fed. Okay, it's very important that they happen the same day. I mean, that could spike the volatility, that we could have massive volatility today. So our just very briefly, I can see that plenty of you have joined us. Just very briefly to explain where we are standing in regards to the Fed right now. As you already know, there have been a lot of efforts to from all the central banks, actually, not only the Fed. This is a global phenomenon to lower the inflation to their target level, right? So for the Fed, the target was around 2%. So and there was just a tiny and modest improvement this year through April because of the mainly because of the strong jobs growth. Okay, so this is what is what was a key inflationary pressure, inflationary actually boost, sorry, for the U.S. economy. So that's why we've seen the postponement of the interest rate cuts. We have seen analysts expecting that the central bank will not rush a rate cut and etc. And indeed, even this time, even today, we don't expect a rush towards a rate cut. But the important, as I said, is the press conference, is to see whether they will actually, based on today's data as well, whether they will give us, let's say, further indication of the time of a possible rate cut. So, given that the inflation in the United States remains above target, activity is robust, labor market still robust. I mean, I don't know how many, whether I have to remind you of what happened, that huge bid that we have seen on NFP on Friday. But considering all these, the Fed can exercise patience in determining when it would actually take action and adjust its policy rates. Nonetheless, I don't want to spend a lot of your time on the fundamentals. I will share my screen just to see where the dollar is standing right now. Okay, here is. Can you help me with the HF copy trading? Zimmer, I cannot help you right now in this live analysis, but please contact either your agent just to give us keep to bring us in contact so we can help you, or can you advise where are you? I mean, which place of the world are you? Because we might have local agents that could actually help you face to face. Just advise where are you from, just uh, to understand whether this help could be done virtually or face to face. Okay, so let's go back. This is the dollar, guys. Okay, this is the dollar. Let me bring actually the daily chart first, just to see, and zoom in, Andrea, just to see the appreciation. And I'm gonna stick also because I know that you will keep asking, what is this? What are we looking? This is dollar index daily. Let me write also the daily. Perfect. So this is dollar index daily. As you can see, a decisive boost. That was clearly the NFP. But the asset has maintained a move above 105, consolidating basically this week because we are well anticipate, all the market anticipate the data today. So that's why you have seen this wait and see stance, this consolidation, this sideways movement, holding though a move above 105. Um, so what I want to say about the dollar. Sorry, I'm just. So this is just, I just shifted into the 1 hour chart just to see the consolidation. Okay, which is a clearly ahead of the data. Um, so what is expected today is actually okay. So it's actually to uh, to have not to have basically further increasing the inflation. Okay, so sorry, there is some noise outside. Sorry. Yeah, what is expected today? Let me share the calendar as well. But with the inflation, let me just share the calendar so we will be all of us will be on the same side. Where is it? Calendar. Chrome tab. Economic calendar. Here we are. Perfect. I think you can see it perfect. So yeah, as I was saying, the inflation today has been forecasted by economists, by a lot of research houses, and etc. That will come will come at 3.5%. That's the headline. Oh, and you cannot see it. Yeah. So the headline is expected, excluding food and energy, is obviously 3.5. And the monthly, look at that. The monthly is the key. Can you see the monthly? The monthly is the key. Sorry. Because we're expecting basically a slowdown from 0.3% that it was in April down to 0.1% for May. Okay, so definitely this is what it dominates right now, the markets and the dollar more precisely. And basically, in line with these expectations, results in line with these exact expectations that we're seeing right now, should basically keep the headline steady. Okay, so this could be enough, okay, to to suggest to the policymaker, to confirm, let's say, to the FOMC that there is some progress, that has some progress has been made. Clearly, not enough to support lower rates anytime soon, but it's a progress. If, of course, we have in line with the forecast results. Um, so yeah, that could be something that could um, be enough for the Fed for the time being. It does not necessarily, we don't necessarily waiting to see um, significant, if we see in line with expectations, right? Let me get back to the dollar because I want to explain a bit how the dollar, what you need to be very careful regarding to dollar and its reaction. And in line with the forecast data, do not necessarily mean that we're gonna see the dollar coming down. Okay, in line with expectation data, indicate that some progress has done from the FOMC actions. But as I said, because tonight is the Fed, an in-line result today could, ahead of the data, could keep the dollar still ranging. Only a surprise either to the upside or to the downside could spook, let's say, the markets, and we could see decisive move either to the upside, either to the downside, depends on what kind of data we have. For example, a surprise to the upside, indicating that we still have a persistent hot inflation, solid inflation, etc., that could support the dollar to the upside. But a missed, so a lower than expected data today could suggest that the Fed might take action sooner than what was expected. So this might add pressure to the dollar. But as I said, it's also the Fed. So do your homework. Sorry, find your immediate support and resistance levels. Okay, in order to be prepared ahead of the result. This is the 1 hour chart. It's a clear ranging market. Immediate support can be found at this gap up over here, 104.98, or slightly here. Okay, and to the upside is a confluence of the first resistance level based on my pivot point, which is also the latest high seen this week. So this is the barriers of the ranging market. Okay, this is our immediate support and resistance level ahead of the data in less than 15 minutes from now. Guys, I keep saying this is your session, so ask me anything you want. Do you want me to explain in detail also, more with more details and more simpler words, maybe, um, what is expected today or what we should be careful about? By the way, I will, um, okay, I have the normal chart with the candlesticks in 1 hour chart, but allow me to have also, okay, we have lower stochastics over here and lower, okay. Allow me though to have also Heiken Ashi, okay. This is a 2 hour with Heiken Ashi. Let me check the 1 hour as well. So small body candles, but without any tail at the top. This is the Heiken Ashi one. So bears are trying to break that level that we were talking about. Okay, so let me just, yeah. So we're gonna keep an eye on it ahead of the data. What else? What else? Actually, let's go through the stocks and gold market and oil. Oil has seen a boost this week, actually since last week. So because we have still 30 minutes to go until the data, so why not touching a bit and get prepared on the commodities and the stock market as well. So allow me to go to the Nasdaq. Nasdaq and S&P 500 are the ones that keep posting record highs since last week. Okay, is the AI story, is the Apple also boosted significantly Nasdaq last night, 7% rally, 7% rally in, sorry, 7% rally in Apple supported the stock markets overnight. As you can see, so far today is sideways, flat, traded flat, awaiting for the data. Pretty normal. Markets are being broadly cautious, seeking for a clearer sign from the banks. So the move that we have seen overnight, if you have not heard about it and you just open your PCs, it was the Apple story and the fact that Apple rallied by 7%, boosting the US indices and more precisely Nasdaq and S&P 500 to record highs for a second session in a row. In general, the tech sector has been a significantly positive driver of the stock market for a while now, right? AI features on the Apple devices and etc. Along with NVIDIA and its AI chips. Um, so with if I'm not mistaken, both these two companies, yes, Apple and NVIDIA are the most valuable companies globally, if I'm not mistaken. Um, so yeah, so the main driver yesterday it was the tech sector. Okay, so but now as you can see, flat, marginally flat. We're waiting for the data. What you should know about stocks and the correlation with inflation and the Fed. The higher inflation indicates higher rates for longer. That's negative for the corporate sector. Improvement in the inflation, slowdown in line with expectation data, and etc. That's good for the companies because it suggests that we might see rate cuts this year. So far, the scenario of 2 possible rate cuts this year is still stands, okay? But it might change ASAP, as you know, if we have any kind of surprises. So, regardless of the fact that the Fed keeps rates high, in general, the stock market has seen a lot of gains, as you can see over here. This is the, let me change the caption. Sorry, I forgot to change the caption. This is not the 1 hour dollar index. This is the Nasdaq, obviously. Okay, perfect. And this is the daily chart. You've seen that it has been to the upside. It's a long uptrend. End of 2022, a sharp move lower in the first quarter of the year, extended higher, and this is not because of the Fed, it's partially because of the rate cuts, of the anticipation of rate cuts, but mainly due to the optimism around technology and the AI sector. Okay, so in general, the gains that we have seen in stocks the last few months have been driven by mega cap companies, by mega cap companies, tech companies. Yeah, so it was partially due to the Fed. That's the overall picture, at least. Okay. The chances of a rate cut in September, they're quite low. If I remember correctly, at around 36%. But everything can change based on the data over the summer. That's so where we're standing right now. Sideways, momentum is positive, is quite strong to the upside, even though there are small body candles, Heiken Ashi, small body ones suggesting decision, but RSI holds close to 70. So for the time being, it's just neutral to positive. That's the 1 hour chart Nasdaq. Let me quickly shift to gold, because I know that the majority of you don't know, for some reason they prefer gold, even though there are so many assets. But that's not bad. Why not? If gold makes sense to you and you have a nice strategy that satisfies gold trading, etc., why not? So this is gold. A lot of uncertainty, a lot of consolidation, stuck, as you can see, at the bottom of the last more than 2 months bottom, right? Yeah, nearly 2 months bottom. Has been traded over here for so far this week after this decisive decline. Sorry, let me get rid of that and that. So, and just put there. I think I keep mentioning this area in my last live streams for sure, because it's a very strong support level. It's the only level that if it's decisively broken, it could change the overall outlook of gold into a possible new downtrend in the medium and long term. Sorry. Okay, that's a very, very important support level. For the time being, we have seen that there is a lack of volume, clearly. But just to mention over here that in general, in the commodity sector, we have seen gold, as you can see over here, correcting significantly, getting back to that nearly 2 months low that I mentioned earlier. Due to the US data. And the jobs on NFP on Friday, because the data, right, on Friday reduced significantly the bets of a Fed rate cut in September. So they have shifted the possibility of a rate cut later, November, even December. Okay, that's why that has that has made the bullion, the gold, less attractive. Okay, that's why we've seen some cash flows out of gold into the dollar, into other assets, um, treasury yields, etc. Um, what else I wanted to say? That was responsible for why gold has shifted down and is at this key support level. Um, and also there is a weak demand signs from China. Okay, something that also adding pressure to the fundamental factors that support gold. And remember, okay, we have 4 minutes to go. Just one more thing about gold, okay? One more thing about gold. Do you remember when we were keep saying that is well supported by the gold purchases by the central banks? You know, in times of uncertainty, political turmoil, recession, etc. Banks buying purchase gold, right? It's an effort to, with this way, to support the economy when the currency of the asset is expected to depreciate and get cheaper to cheaper. So we keep having massive purchases of gold from the Chinese central bank. But last month, we have seen that the Chinese bank did not buy any gold last month. Okay, that's also reason why the prices of gold has been heated from the record highs down to the 2 months bottom. So they didn't purchase any last month. They didn't add to their gold reserves. So that was a negative catalyst for the gold's price. Yeah, so I think it's time to get prepared, or is it too early? We have still 30 minutes. Okay, let's quickly check also oil. Why not? My oil, here was. Let me just put the white template. Okay. Let me oil. That's a daily. Okay, guys. Oil. I cannot see any comments in YouTube. Uh, Let me check the YouTube channel. Maybe something, because that's very bizarre. I can see a lot of people have joined, but I cannot see any comments, and that's a bit weird. I know you very well, I think. So okay, there is a technical problem apparently. Um, Let me ask my colleagues to enable somehow, if they can, of course, the chat. Something went awfully wrong, and you cannot add any comments, which is a shame. And I know that you like the interaction. So hopefully we could solve it ASAP. I have already asked my colleagues. It's a shame that I haven't noticed it earlier. It seems that the YouTube users cannot comment for some reason. Guys, don't worry about it. If you have Facebook, if you have Twitter, if you have LinkedIn, visit this particular live through those channels, and you will be able to send me questions and etc. Okay. That explains why you are muted, even though there is 100 of people over here with me. So really sorry for that. I didn't want it for something like that to happen especially today. Oh, okay. So data out. Let me quickly uh, bring the share the calendar. Come on, refresh. Come on, come on, come on, come on. I should have. Come on. Data, data, data. Come on, where are they? Oh, God. Yeah, 3.4% headline, 0.2%, not bad. It was expected. I mean, and even less will be great, but that's a progress. That's the progress that the Fed wanted. 0.2, less than expected. 3.3, less than expected. 3.4, less than expected, and less than last month. In May, just neutral, steady, not percent growth. That's a positive data for the Fed. Okay, for the Fed. Okay, stop sharing. Let me bring back dollar ASAP. Where's dollar? Dollar, dollar, dollar. And yes. Oh, guys, this is what we mentioned earlier. Miss today downwards, it will be an improvement, a progress. It will be good news for the Fed, bringing the rate cut possibility closer, and that could be negative for the dollar. And this is indeed what actually happened just now. Gap down, broken the gap, broken the 105 level, deep one down to 104.50. That's a 50 pips move in just 2 minutes, in 2 minutes time. And this is why I told you, get prepared, put your support levels, put your resistance level. I forgot to mention pending orders, but I think you are experienced and you have your own strategy, or the majority of you at least, and you were prepared for any scenario. I did mention that the momentum was anyway down. So yeah, this is definitely progress from the Fed. That doesn't change the fact that it's unlikely to see a move today. I mean, today it's clear that even with such a positive data from both a positive US, by positive I mean what the Fed wanted, right? We want inflation to come down. For the supporting to stabilize eventually, and in order for the Fed to start moving closer to the easing policy, right? Remember what I told you. Lower than anticipated data today will be negative for dollar, will present progress for Fed, and will be positive for stocks. So let's see how stocks reacted. Where is the Nasdaq? Nasdaq. And yeah, positive for corporate sector, guys. Lower lower interest rates, right? Even a sign of lower interest rates, that's good for the companies, for the corporate sector. If you have your own company, I'm sure you are well aware of it, because it means less expenses, right? So that's why we've seen this boost higher. And to be honest, I don't believe that doesn't seem that it will. I mean, there is not mixed signals from the data. The monthly reading was down, excluding food and energy also down. The headlines also down. The not seasonally adjustment reading also lower. So there are no mixed signals today. The breakdown of the data, it doesn't give us mixed signals. It is a clear progress. Okay, so this theoretically, at least from a fundamental perspective, is not expected to be a limited move. Obviously, we might see a pause, okay, ahead of the Fed, but this is progress. This is definitely progress. This is what the Fed is so eager to see, and he has seen it today, just few hours before the Fed meeting. Very, very important. Very, very, very important. Well, and actually wasn't anticipated, but this is what this is the kind of the type of news that the central banks want. Okay, inflation pressure finally eased, right? And this quite decisive reading as well. Okay, inflation, the headline one, it's a bit, we can claim that it's a bit flat. It's 3.3, but both measures missed expectations and beat economy's expectations. A decline in the energy prices might be responsible for this downwards pressure on a headline. And by saying declining energy prices, I'm referring to the May performance, right? Because we see an upwards lately on the oil and the energy prices. Significant drop in gas prices might also added to this downwards pressure in inflation. Core also some improvement, cooler than April's, but some improvement. So cool, cool. Oh, it's a shame that people cannot comment. It's a shame. It's a shame. Uh, okay, guys. Since you cannot comment, I will try to go through the things that I know that you usually ask. So we're gonna go straight. I'm not gonna discuss any further for the inflation and the Fed and etc. We're gonna go straight to the technicals. Okay. So this is the Nasdaq. Hey, Gabby, I can see your test. Okay, if that's a confirmation that you were looking for. This is the Nasdaq. Come on, show. Let's do the technicals since we have covered, I think, the fundamentals. Ranging market broken. Obviously, we have another 20 minutes to go until this candle close, but let's go down to the 30 minutes chart to see what actually happened. It was broken anyway earlier, you see, outside the ranging market, already boosted back to the second resistance of the day. No tail at the bottom. This is a Heiken Ashi candle. RSI spike higher, stochastic holds higher. There's no bearish moment, bearish cross yet. So it looks that bulls are in control. We might see some consolidation, okay, at the second resistance of the day because that was a massive move. But the data should support further the stock market, okay? So keep an eye. Keep an eye on your shorter time frames, okay? Sorry, because any pullback or consolidation might be limited ahead of the NFP. Ahead of Mr. Powell's statement. The data are positive for stocks. Only a move, let me measure it, only a move below 19,350, 355, or first resistance of the day could turn the attention back to the ranging market. Only a break lower than that. A consolidation at this area is just, it could be just a correction ahead of the uh, testimony. Testimony basically is a press conference, not actual testimony this time. Let's get back to the dollar. I would like to see the 30 minutes chart. Kenashi again. Huge. RSI keeps pointing downwards, so it seems that that is furthest into the downside. Stochastic tried to rise a bit, but very narrow, very flat. So it seems that bulls have not really cannot take the control. So in the short term, it seems that even though we have a very, very big decisive move, sellers are in control. Significant support is this old resistance level that I used to have, right? 104.20, or even guys 104 level. Okay, so keep an eye on these immediate resistance levels. This is a 30 minutes chart, that's why I'm saying immediate. So if you measure it, you can also we can also use Fibonacci's just to measure it. So with this way, you will see also that this move. Let me zoom a bit. This move retested three Fibonacci levels in a row. Boom. 38, 50, 68. There's no closure yet. I mean, this candle has not closed in order to see whether it's below 50 or not. We have again another 15 minutes to go until it closes. But there is a clear, strong, increasing downwards move, downwards momentum intraday. So if this move sustains, okay, next level to be closely monitored at the 104.20, 104 level, okay, as the immediate support levels for the dollar. Remember, 61.8 Fibonacci level is a strong retracement level. So we might see some consolidation over there. But any sign of a further decline, it will mean the resumption of this dip. With gold clearly up. Dollar weakness, broken this consolidation. Anyone that had pending orders, pending order with a long position at the break of the latest high, has seen already its position open, already moved above the first resistance of the day. The second one for the day is a few pips higher, actually another $5 higher. Yeah, 6.7, nearly $7 higher. And the very next one at 23.46. Okay. Yeah, so let me measure as well once again. 50% lies 23.35. That's very close to the third resistance, so that's a great potential resistance level as well. Momentum strong. Both RSI and stochastic keep posting higher lows, right? Nice, smooth channel. Oil, let's see how oil was affected. We haven't touched it. Just to ring the bell a bit on the oil over here, it has seen a significant improvement, right? A strong rebound, retracing more than 80, nearly 90% of this latest dip. But guys, it remains in a down channel, okay? So keep an eye because it's at a very important resistance area. Actually, let me add my wrong. Sorry. I used to have exponent. Yeah, that's the exponential. So it's already at a very, very important resistance area. So something that you should keep monitoring tonight and the whole week because this is likely to be a retracement level. Okay, so keep an eye on it. Obviously, a break could add, could signal a possible reversal. However, considering the geopolitics and the uncertainty around the energy sector, that could be a limited move and could lead to the continuation of the downtrend. So a very important day today or even tomorrow, just to keep monitoring for a possible sign of a complete reversal of this downtrend. However, with momentum posting lower lows, right? Sorry, come on, lower lows. The overall outlook remains negative. So that's why I said this might be a short-lived move. It came up to the trend line, and so it might be a retracement territory. So keep an eye on it. Next resistance or immediate resistance, if you prefer, is the 80 level. 79.96, but round it up, 80 level. 80, a pullback, a bearish pattern, anything that could trigger the pullback from that territory could open the doors down again and back to the 76, 75, 70 territory, etc. Okay? The dollar crosses have moved along with the dollar weakness, right? Euro spiked 108 16. Oh, sorry, let me just let's see what's going on over here. Sharp moving averages. Stochastics flatten at the overbought territory, no indication of a pullback. RSI keeps pointing higher. Rock the same. MACD turned positive and keeps rising. So bulls are in control intraday, guys, in the short term. So next resistance lies on this bottom over here. So 108.50, if I'm not 55, if I'm not mistaken. Let me change the color because it's not. Yeah, 58.60. That's the next resistance level for euro. Intraday momentum is strong. We're just few minutes away from the close of this candle, and it seems that the momentum still holds. So wait for the candle to close just to get further confirmation whether it will continue as strong as it is right now. Guys, we've been here 50 minutes right now. With a lack of chat, I feel all alone over here. Um, sorry. That was euro dollar. It's really difficult to change all the time the asset. I keep forgetting. Let me just go through the news to see whether there is anything that I have missed. Maybe something happened just to be in line and let you know. So in general, guys, just for you to be aware, stocks edge up, gold the same, oil the same, dollar under pressure. Dollar currencies move along with the dollar weakness. So euro dollar up, pound up, Aussie dollar up, New Zealand dollar up. risk sensitive asset dollar yen down, dollar Swiss down as well. Where is dollar yen? Dollar yen, dollar yen. Here we have our your dollar yen, dollar weak dollar. That's why yen gain some traction, risk sensitive asset as well, to for risk safe haven basically. Remember, so where we're standing right now, let me check back to this resistance. Now it seems that it has converted into support. MACD turn, MACD is positive. Let me just get rid of some indicators, too many. MACD remains positive, but both stochastic cross a bearish cross. It keeps pointing downwards, so there is some further room to the downside. RSI the same, cross below 15, it keeps pointing downwards, so it means that there is further room to the downside. So that implies, to find obviously our very next support levels, which is at 155.80, 155.10. That's the 4-hour chart. If you want, let me use ATR as well. So in this 30 minutes chart, ATR is at 0.13, with the 1 hour at 0.17, yes, which it should be somewhere here, 155.60 according to ATR. Guys, I'm gonna call it a day because I don't have your comments. I don't know what else you want me to cover. So I did the best I could. Hopefully that session helped you. Bitcoin spiked as well. Just a breath away 1700s, but still off its record highs. Supported by the 50-day moving average. Sorry, that's just random lines. Yeah. So guys, I'm gonna call it a date. May the dollar, the Ontiporians might have moved the most. Let me double check. It seems that they were the ones that, yeah, indeed. Antiporian guys, New Zealand dollar and Aussie dollar have benefited the most, more than 0.8% rally. Okay, huge, massive 30 minutes chart, a 30 minutes candle, as you can see, nearly full body one, reverted all the losses that we have seen last week. Yeah, last week. Oh my god, that's a massive daily candle. Yes, indeed, look at that. Anyway, it was to the upside the last 2 days, but now is back to last week's highs, retracing back the losses that we have seen in NFP, MACD positive, RSI positive, and it seems that is ready to break this 62 level, which is a 6 months resistance. So keep an eye on that as well, because a break of this 6 months resistance at 0.62, 62.20 could open the doors to the last year's highs and the here we are, come on, and the 63 level, 63.50, 63.70. Okay, the biggest gainers so far, if I'm not mistaken, at least from the currency market, is Kiwi and Aussie. Okay, guys, I'm gonna call it a date. Have a great day ahead. Take care. We still have the Fed. So the data should theoretically keep the Mr. Powell like in a more of a dovish tone. Uh, so yeah, because anyway, it's what they wanted. So anyway, we have seen a dovish tone from him back in April, if I'm not mistaken. It was the dot plot basically. So, but in the Fed officials so far, in their very last comments, they said that no, we don't need just one or two improving months inflation data. We need several more months of improving inflation in order before we decide to cut. This is an effort to keep a bit the market under control. Who knows? Be careful, do your homework, risk management before the Fed, set your strategy, put your trigger points, stop losses, money management, risk management in place before you decide to trade the Fed rate policy and press conference. Volatility is expected to be seen in the press conference rather than the rate decision. Have a great day ahead. Thank you. Take care. See you again tomorrow. Bye bye.